Forkast.News is your gateway to all things blockchain. We do the deep dive and the due diligence on the blockchain projects and platforms that matter, because we aim to be the most reliable source of intellectual discourse and insight that inform, educate, and bridge the gap between the blockchain industry and the mainstream. Welcome to Word on the Block, the series that takes a deeper dive in the topics we cover right here on Forkast.News. I'm Editor-in-Chief Angie Lau. And in recent days, we've heard talks of a global digital currency, one that could displace the US dollar in its rightful global reserve status space in the global economy. So who said such a thing? Could it have been those cypherpunks, those crypto enthusiasts, maybe those libertarian developers? Nope, it was none other than outgoing Bank of England Governor Mark Carney himself. He spoke those very interesting words about the potential of a central bank-backed cryptocurrency or digital asset, or something he called synthetic hegemony currency, essentially a global reserve currency backed by many instead of one. What did he mean by all of that? Well, we're here with Michael Every. He is the, let me get this right, the head of financial markets research Asia Pacific and trained economist. Michael Every is joining us. He's from Rabobank. This is one of the top 30th largest institutions, financial institutions in the world. So that's quite a mouthful, but it helps our audience really understand that as a trained economist at one of the largest financial institutions in the world, and to have a central banker like the Bank of England governor coming out to say that potentially we need a multiple backed digital asset in the global economy. These are pretty heavy words.
Extremely heavy. I mean, just to try and put it in context for viewers, it's kind of like going to a Jewish wedding and asking for a pork chop. It's just not really the done thing, particularly when it's at a central banking conflab organized by the US on US territory. So you turn up
That's
there
right.
and you give a speech basically saying, guys, the US dollar, you've had your day in the sun. We think we should replace you with something else. It's quite remarkable. And in fact, even before we go any further with the conversation, what I'm curious is, did they know in advance he was going to say that? Do you really think they gave him clearance, or did he just surprise them? Because I really politically can't work that out.
That's what's interesting. He was invited. The luncheon was at Jackson Hole. His audience were the world's, all the central bankers in the world. And this was really Jay Powell's event, FOMC central bank chief. This was his event.
Yeah.
And yet, we had Mark Carney coming in on Friday. It was August 23rd, came in a luncheon and spoke those words of saying, the international monetary and financial system is broken and we need a new system.
Yeah, and you have to say he's not wrong, but there's a time and a place to say it. And wow, he showed some real chutzpah there, turning up and saying that. He did.
He talked about synthetic hegemony currency. What is this, theoretically?
Okay, well, theoretically, this isn't actually something new. That's the first thing we have to say. Maybe the format in which he's talking about doing it is something new and is technology based, and we'll come back to that in a moment. But the concept of having an artificial currency, which is actually like an amalgam of many others, goes all the way back to the post-World War II period. In fact, if you know your economic history, you'll know that John Maynard Keynes, one of the greatest economists of all time, he floated the idea of a global currency called the Bancor, B-A-N-C-O-R, which would have been, the one currency that everyone around the world uses to get rid of the kind of currency volatility that we deal with in markets and either profit or lose from all the time. So that idea itself isn't new. Mm-hmm. What Carney was suggesting is that we use technology to make it happen. Mm-hmm. And I'm not going to profess at any point here to be the technology expert. I'm here for the other side of the balance sheet, if you will, to talk about the currency side of it. But just because it's easier to do physically with the technology doesn't mean that you manage to deal with all the other real world barriers, which were exactly the same ones that we were dealing with all the way back in 1945, when the Bancor was shot down by none other than the United States of America, which is where Carney's just given this speech. So
It's very Is it ironic? It's very timely, however, because we do find ourselves in a global economic environment where pretty much the fact that the US dollar is the global reserve currency, every nation is tied to the monetary policy of the United States. That inflexibility is really what's causing this volatility, right?
It's a large part of it, absolutely. I mean, when the US was this big and the global economy was only that much bigger, you could live with it. It didn't make much of a difference, really. Nowadays, every single day, the US is proportionately a smaller percentage of the global economy, depending on how you measure it, and a smaller percentage of global trade. And yet here we are with this one, shrinking fulcrum around which everybody else has to rotate. And when you're doing your accounting, you're doing it in dollars. When you're doing your international trade, most of it, you're still doing it in US dollars. When you're looking at stock market valuations, it's usually dollars you're thinking. When you're talking GDP, let's not get too technical, but everyone knows what GDP is. You're talking dollars most of the time. So we're all doing it as like a lowest common denominator, if you will. So we all understand what language we're talking. Because if you're talking sterling, I'm talking dollars, they're talking euro, they're talking yen. How do we even compare apples with apples? But we're only using, one kind of apple from one kind of tree in an increasingly large orchard. So, it is a difficult situation. To talk to the volatility part of that, remember that it's not just about how you're accounting. It's not just how you're transacting. It's two things. It's what cost are you borrowing at? So say, for example, everyone's having to borrow in dollars because international trade is transacted in dollars. So therefore your trade commodity finance is done in dollars. And then the Americans decide, well, you know what? Our local economy is looking pretty hot. We're going to raise interest rates. Well, guess what? You're in country X trading with country Y on the other side of the planet, and suddenly you're finding your borrowing cost to do economic trade between these two places is being dictated by what's going on in America on the other side of the world that they couldn't even find you on a map, literally in some cases. Of course, that's extremely disruptive. And we've seen repeated cycles played out in history, and I would argue we're on the cusp of another one now, where everyone suddenly realizes that America is out of sync with the rest of the global economy. Everyone who's borrowed dollars very heavily suddenly realizes, you know what, it might be difficult to pay this back. And we head for an almighty bump, crash, and squeeze, which is going to be extremely painful. Now, that's a financial market story, not a technology story. But it underlines why there must be a better way to do this.
But listen, it's a financial story that is motivating people to dive into the technology story, which is cryptocurrency, which is blockchain. Let's talk about the crypto aspect of it, right? Because, in parallel to all of this is emerging cryptocurrency. And the talk of a stable coin, which, if you think about it, reflects and behaves very much like what Mark Carney talked about, which is synthetic hegemony currency that is backed by many, whatever that fundamental backing of that currency is, that reduces the volatility and allows people to engage in a different system that is more flexible and more real life in terms of how they live. We're seeing that migration of liquidity in Argentina. We're seeing that migration of liquidity even in China and the US. Having said all of that, do you think at some point the two worlds will converge and we're going to find ourselves in this very interesting space where this story that has been growing in blockchain and cryptocurrency for the past 10 years is now at a place where it's converging with the likes of Mark Carney?
Well, that's the key question. That's why we're talking.
Yes, that's why we're talking.
I have to say, cut a long story short, the answer is probably no, which is not very sexy for a long, important question like that. But let me try and explain why. Because many people would say, when you look at the kind of volatility we're talking about, and we look at the technology dynamic you're talking about and how much sense it makes, it's got to happen, right? It's got to happen. Well, history suggests not. So does, and excuse the slight segue here, so does philosophy, okay? Let me start with the philosophy, then get to the history, and then we'll talk about the technology. What's money? What is money? What does it actually mean? I mean, this goes all the way back to the ancient Greeks. Do we find value in something we just assign to it? Or does something inherently have value? Now, if you believe something inherently has value, traditionally...
it only has value if somebody is willing to pay you for that, pay or agree that that is the value.
Exactly.
And then you both agree that in exchange you have something of equal value.
Exactly. And there's the philosophy, because we are two independent human beings with our own conceptions of the world, both agreeing relatively arbitrarily, if you look at human history and what we've used as currency, this has value, whether it's beads or shells, or, of course, I was referring to gold, where people will say gold inherently has value because it's in the ground and there's a limited supply of it.
Right.
And this is part of the immediate problem. This has to be something that literally doesn't grow on trees. Because if we say, look, I see value in leaves, hey, I see value in leaves too, fantastic. The first time one of us goes through an orchard, we're all pretty rich.
Okay, so two things about that. So when we talk about cryptocurrency, and we'll talk about the classic, the godfather of them all, Bitcoin, there is a limited supply. Could you say the same thing about the US dollar?
You couldn't. And of course, we live in a world where we have an unlimited supply of US dollars, because the dollar used to be pegged to gold.
Correct. But it is no longer.
No, it hasn't.
Pegged,
hasn't
right?
been,
And so
absolutely.
the criticism has been, well, you can print money until you're out of trouble.
Of course.
And you have just given my son and his children and his children's children the bill, right? That's essentially what we're talking about here.
I don't disagree, and I'm trying to see both sides of this. Okay, so I'm very sympathetic to that side. Equally, and I spend a lot of time arguing about this with people, if you look at the long run history again, what you can see is during periods of time where we take the alternative approach, which is to say, okay, this, and I'm holding up my hands here pretending this is gold. I wish I had a nice big lump of gold like this rather than the tiny little silver gold. When you say this actually really has value and there's a fixed supply, whether it's Bitcoin, whether it's gold, whatever, that comes with genuine real world side effects. And what are they? Everything becomes zero sum. If there's only one gold piece in the room, you've got it or I've got it. If you've got it and I want it, how do I get it? Now, on one hand, we can say, well, you trade for it. Fine, then I've got it and you haven't got it, which is not going to do much for your money supply because you haven't got the coin anymore. Or I can bash you over the head and take it. And actually, you can see in the long run of history, periods during which mankind as a whole has been on a kind of gold standard and saying money is fixed, this is money and nothing else, tends to be much more violent because everything is zero sum. You've either got to run a trade surplus with that guy and you get all the money and they haven't got any, and then you've got the power over them, or you just go to war, you bash them and you take it and say, no, I've got it, you haven't. Whereas if you go down this route of infinite money, which you basically have, with the dollar today, the Federal Reserve could create $1 trillion tomorrow if they wanted to, and they almost did during QE, basically. Okay, so there you go, there's money. It takes away that imperative to actually fight for limited resources because you can just flood the market with it. Now, does that come with side effects? Of course it does, because it can be highly inflationary. What's anything worth? Because I can just have free money. Is there really free money? Of course, that's a problem. But let's not paper over the cracks that philosophically saying that this is a rigid fixed amount, as there is with Bitcoin, for example, tends to, number one, correlate with violence historically, or correlate with trying to run trade wars, what we call mercantilism in economic history, which is I sell and I don't buy and all the money flows to me, which was a very violent period of world history generally. And even if you say that's not a problem, Mike, the first one's not a problem, the second one's not a problem, I'll tell you what else it correlates with. Volatility in prices. Because if you've got a fixed stock of money, whether it's gold, whether it's Bitcoin or whatever, something has to adjust. So prices might have to adjust down. So then you'd have deflation rather than inflation. And then suddenly you might get a lot of Bitcoin or gold. You find some gold in your back garden, lucky you. Suddenly prices can go back up again. So if you look at the long run history, when we had the gold standard, which we used to have, you can say, hey, things had constant value. Sure, but prices were not constant. You had like up 10%, down 10%, up 8%, down 6%. You try running a business on that basis.
Well, look, listen, that is the criticism. That massive price volatility swing is a massive criticism about the functionality of cryptocurrency at the moment, which is why technology is coming up with different ways to really answer that, right? Stable coins. But let somebody else figure out however they want to market or talk about those things. And let's talk about the application of technology here. That in an ideal world in which we have all of these technological tools around us, can we apply the best practices of monetary functionality to a global trading game
Again, it's a
that
great...
allows, people to engage in a more fair, equitable way?
Well, I'm going to say no again. Look, I missed a no today. The reason being that technology is a facilitator of many things. Don't get me wrong, right? It really is. The problem, again, here is still, number one, philosophical, which is where's the right balance between saying this is fixed and this continues to expand? Because if the global economy keeps expanding, you have to expand your money supply. Otherwise, prices can only go down. Imagine if there was no more money than we already have in the world. As you keep growing, every year prices have to go down, and they go down and down and down and down until the price of like a loaf of bread is 0.000001, which is just as bad as it going up 10% every year, because it's very confusing, right? So that won't go away, that problem, regardless of the technology. At least in my mind, it doesn't. But secondly, this is when we come back to the politics, which we were referring to with Mr. Carney giving that speech in America. We live in a world where we're still dominated by the US dollar.
Yes.
US has the world's largest army. US still has the world's largest economy. US has a president who's not afraid to use US power in all different dimensions, so far short of military, I have to say, to try and maintain the US hegemony. And you've got Mr. Carney turning up and saying, well, how about we have a new hegemon? Now, look up the word hegemon in a dictionary. Whether it's an electronic dictionary, if you want to be technological, or you want to be old-fashioned and go to the shelf and pull down the Cambridge, Oxford, or whatever. Hegemons, they don't tend to be benign, and there tends to be a bit of muscle involved in being the hegemon. I can't think of many hegemons who have sat there peacefully, apart from mum and dad maybe in your own family giving gifts out, right? So does anyone realistically think that this United States of America, this White House, let's presume that Trump wins re-election, is going to turn around and peacefully say, you know what, you're absolutely right. It's in the greater good of mankind for us to step back from this privileged role where every commodity in the world is priced in US dollars, so we never have any exchange rate risk, where everything internationally is done to suit us on that basis. We're unilaterally going to give that up, and we're going to hand over that power to an unelected little cabal of bureaucrats who sit in a white tower with some high-tech computers around them, based in, you name the physical location, I don't know, Island X or country Y, where's it going to be? And we'll let them run everything, and we'll just be one of the gang. Now, again, I've been a bit of a poo-pooer so far, and I'm sorry, but if you really think this White House is going to do that, I've got a bridge to sell you, and I'll sell it for you in dollars or euros or bitcoins or whatever you want. I'll take payment in any
show.
of them.
Michael, that is another show, to be sure. I mean, politics definitely is in play here, right? And what's interesting is that one of the tools of the trade is saying that another weapon or another system or another game should be played. And that's certainly what Mark Carney talked about. What's interesting is that this is really reflective of what's already happening outside the system. So what's happening outside the system, and what's increasingly more interesting to not only just retail investors, the average mom and pops, but increasingly institutional, more sophisticated investors who are trying to hedge against a system that hasn't, we could arguably say, not been fixed since 2008, that another system could potentially emerge a winner here.
Theoretically, again, I can see it, but I'm going to be consistent, I'm afraid, in that while you can see the logic, and the logic is there, you have to understand the greater dynamic, or the greater, more powerful logic, which is who has the guns and who has the prisons.
So you're saying no based on the political reality, which is...
They can make it illegal tomorrow. They can say, for example, Bitcoin.
That's what we're seeing.
What they're saying, like heroin, cocaine, whatever. Some people like them, some people don't. They're just illegal. You use them, you take a risk, you get found, you go to prison. You could do the same thing with Bitcoin.
Absolutely, and we're seeing that. We're seeing in the regulatory space in the U.S. Regulators are talking about it. We're seeing what's happening in Asia. However, what we're also seeing is that as things clamp down in one part of the world, it's like whack-a-mole. Things pop up somewhere else, and it's popping up here in Asia. And so what's interesting...
You could say the same thing about the drug trade, to be honest, as well.
But we're talking about... Well, it's interesting that you connected the drug trade and monetary policy, because some would argue it really feels like the same thing. But look, the PBOC just came out and said this year we're going to have a central bank-backed digital currency.
Right, now there's an interesting one. And I have to segue here because that can be seen as a stepping stone towards this, but I actually think it's something different.
Okay.
Because if you're in China, it's an incredibly advanced payment system they have. You don't see people using cash.
No.
Most people pay with their phone, etc. Now, on one level, it's smooth and easy and convenient. I get that completely. And I was just in New York, just the other day, and the taxi driver had a whole, wad of dollars in his pocket. And you look at the two and you think, okay, which one's the more advanced economy? I have to say, equally, given what we know about data privacy and what control you can have over an economy with these digital transaction systems, I was thinking, which guy's more free? The one who's beeping with his phone, where everyone knows exactly what you spent, everyone knows exactly what you're buying, where you were at what time, versus a cab driver with a roll of tens and fives and ones in his pocket, and no one knows where he's going or what he's doing, etc., etc. So again, it's philosophical and political. But in China's case, already the currency is so digitalized or so electronic that very little cash is being used. If they do move over to a digital renminbi, which, by the way, is one of the world's most controlled currencies in terms of where you can use it and how you can use it. They're not doing that to liberate anything in the way that you think of cryptocurrency. This is no way libertarian. It's about authoritarian control. If you don't have any physical currency, if you get paid into your bank account like most of us do, you want to go shopping, it's all got to be via your phone or via a card. What's to stop a government saying, okay, we now have negative interest rates, for example, instead of your currency earning 5% every year? Wouldn't that be great? Or 0.1 as we get now, it's going to be -2. And in fact, we don't like you for something you said. It's going to be -3 for you until you shut up. You're a businessman, it's going to be -10 until you go invest in a project. On the project, okay, we're going to make those funds available to you at 7% if it doesn't have a social goal that we like, and at 3% if it does. What do you have there? You have micromanagement of the economy via the digitalization of the financial system through to the currency.
Totally get that.
And it's not libertarian. Again, it's the complete antithesis of what these guys are getting at.
Totally get that. But in a global trade where even Mark Carney talked about the RMB as potentially offsetting the US as a global reserve currency, how would a digital currency or digital RMB behave, act, be utilized in global trade?
Okay, let me try and clarify that. I think what one needs to understand here is the key thing is that Carney turned up in the US and really gave them a slap in the face, but he did not turn up and say, I think the renminbi is going to be the next global reserve currency, which is what a lot of people have been muttering about for some time. He's talking about a digital representation of an amalgam of different currencies, the dollar, the euro, the yen, the renminbi,
no,
some
I get
others
that
together.
part, but he also floated the possibility that, if we're not going to go with US, another fiat like a RMB could be, or a social hegemony currency. Sure. I think he brought up both and not in together.
Sure,
yeah.
But the key point I want to make is the fact that he's kind of skipping over, being realistic, the renminbi as a dollar replacement is indicative of the fact that what China's already doing with this heavily digitalized currency where you go pay with your phone is not in any way compatible with it becoming international. So we mustn't confuse the two. Just because the technology is slick and easy, can you actually do that internationally? Is the actual underlying renminbi as a philosophical concept, because you can't touch it, is it able to be used outside of China, outside of Hong Kong? Can you use that in London, to go shopping? No, you can't. They have real, very, very rigid controls on where you can and can't use that money. And it's basically inside, not outside. Yeah. So he skipped over that because he can see that this digitalization is not moving us towards the world.
Well, it hasn't been programmed yet. It hasn't been theorized yet.
It's not going to happen. It's not going to happen, I can tell you that.
Yeah.
It's not going to happen. The chances of the Chinese letting control of their currency are, again,
similar
to this bridge I'm trying to sell you.
So here's what's interesting about that is that, internally the control, we talk about capital flight, and so does China, by the way.
Of course.
All the time. That's the concern. And so the rules are extremely strict. They don't want capital flight.
Sure.
However, it happens.
Sure.
And that goes back to human nature.
It will stop with digitalization, it will. Because you can't get it out at all.
So it can, but the thing about digitalization is that it's like water, it always finds a way.
Well, if for example, and again, we're purely talking in hypotheticals here.
It's complete theoretics.
Let's say that you move over to a completely digital renminbi, where there are no physical renminbi at all, within a state-controlled banking system, which is what they have, which is all digital as well. there's no way that you'll be able to basically buy a cryptocurrency like Bitcoin, etc., because any transaction that's made along that particular electronic pathway would be blocked, and you actually stop capital controls rather than liberalizing it. And I think the key message here is that technology can be liberating or entrapping. For every device that sets us free, we have a panopticon watching us.
Technology is simply a tool of the human. Yeah. And whichever side of the coin you're on.
Whether it's a Bitcoin or
whether it's Bitcoin or not.
Yeah. But practically speaking, again, if we go back to this idea of a global currency, let's try and really both be theoretical and practical.
Yes.
It's got to have the renminbi in it. You can't not have the renminbi. And yet the renminbi, as I'm arguing, is using the same underlying technology that he's talking about to limit its ability to go internationally. So how do you build up an electronic token, which, I'm holding it here as if it's electronic and you can see it, which is made up of a composite of dollars, euros, yen, renminbi, sterling, etc. How do you do that when the Chinese component wouldn't be allowed to be moved outside China? And the nuts and bolts of that, electronically, philosophically, politically, don't add up.
Could you have an internal digital currency and an external one?
Okay, that's a left field question. I'm not quite sure how that would operate, because the ability to move from one to the other is the key question.
Think about it, right? So internally, you're very clear on the rules. But the rules right now is that you're only allowed to export 50,000 renminbi outside the country, right? Let's say that's a rule.
Yeah.
So digitally, then that 50,000 RMB, or whatever it is, whatever amount that is, then can be used to apply to the external system that you can freely use.
Okay, well, I think I can answer that question. I've had a moment to think about it. You really pulled one out of left field there. Let's just take the word digital out and just talk about saying, have we got two currencies?
We got two currencies.
Have we had that in the past? Absolutely.
Yes.
And we have had them. Well, in China, we have CNY and CNH, onshore and offshore. We've had that in other currencies, including the Thai baht, in the recent past. And if you look back at other communist countries, genuinely communist, like Soviet Union in the old days, they had the internal ruble and the external ruble, effectively. The interesting thing there is that when you have one to the other, generally the reason that's done is the exchange rate between the two is completely unrealistic. In that internally, you say my money is very strong and it's worth X, Y, and Z, and externally nobody wants it. Which is why you then have to set an artificial exchange rate, and the only people who transact at that level are diplomats or people who are forced to transact at that level. And it's actually used as an arbitrage to gain revenue for the country. Now that may sound a little bit technical, but effectively what I'm saying is, if you're saying I've got an internal currency and I've got an external currency, that's a sign of weakness, not of strength, whether it's digital or not digital. And the world, I would imagine you would hope would be moving towards, and that Mr. Carney is alluding we're moving towards, is where there are no barriers, where effectively you no longer have these volatile shifts in exchange rates, because we're all on one money, the same way in California or New York or Hawaii or Texas or Alaska. It's just the dollar. Prices adjust, salaries adjust, but you don't have these other underlying problems. That's more what I think he's alluding to. And an internal versus an external doesn't get us any closer.
Are you surprised how quickly talk of cryptocurrency, blockchain that is not even a teenager yet has evolved even in the mainstream at the highest echelons?
Well, I am, but then at the same time, we live in an environment where things go huge very, very quickly. I mean, I can remember when Netflix was actually just borrowing DVDs by the post. Do you remember that? You used to get a couple of DVDs per week or per month and then post them back. And that ain't the Netflix of today, is it? So it's amazing.
What are DVDs?
Exactly. It's amazing how quickly things are changing. And I don't deny that you're seeing a lot of intelligence and a lot of money, if you'll excuse the pun, being thrown into this. But until we can work out a way to get all the key players in the world agreeing to this standard, effectively what we're doing is just fragmenting things more rather than bringing them together. And it's still, as I said, I'm going to stick to my point, I'm sorry. It's still philosophical in terms of what's it going to be, and it's political in terms of who's going to control it and who gains from it.
Well, it has to be a philosophical debate, and I'm so glad to hear your side of the debate, because the philosophical drive of cryptocurrency and blockchain really comes from the thought that decentralization, that taking control away from the few to the many is actually where true decentralization, true economies should lie. But that is a continuation of a debate that goes beyond us
Sure.
and beyond this room. Before I let you go, where do you think this conversation will go next year? What, as you, let's say Michael Every, and in 12 months from now, takes a look back, how would the PBOC, Mark Carney's remarks, the global trade system, the outcome of the U.S.-China trade wars, and then technology? Where are we going to find ourselves in this digital conversation?
Okay, so we're looking at the whole schmear. Well, basically, I think we can meet halfway on this, in that the kind of volatility that I think is already baked into our current system, which I'm not a great fan of, even if I'm saying it's going to last a lot longer than people think, is such. I can see 12 months from now, when we have wild FX volatility, when we have the renminbi vastly weaker than where it is today, which has been a long-standing call, if you remember our chats from the old days. Yes. Well, we're heading towards those kind of levels now, and it's going to get a lot weaker than this. I think you will perhaps start to see some elements of this conversation coalescing amongst certain groups of countries. So again, it might be that more libertarian free flow ethos that you're talking about, but it isn't going to be global. I don't think it will involve China. I think quite the opposite. I think China will be on the other side, with a very regimented, centralized view. And possibly the US itself still isn't involved, but I can imagine some other countries are starting to think, okay, there's something to this. We need to coalesce into a particular kind of grouping that works for us in a very, very turbulent global backdrop. That's a possibility. At least voices, I think, will be discussing it. That's something I can agree with.
Well, let's make an agreement and meet again the next turn of events.
Okay.
And let's see where this debate will evolve into. Thank you, Michael Every, for that. And thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Editor-in-Chief Angie Lau. Until then.